Hi everyone, I'm René Nelson with Pacwest Commercial Real Estate, and today we are asking the expert, Isaac Grant from Northwest Community Credit Union. He's the commercial lending officer that I like to use for my multifamily and commercial real estate needs for personally, as well as refer my clients to. Isaac, thanks for joining me.
Thank you for having me again.
Yeah. So let's talk about debt coverage ratio and how you analyze a property. I know that's changing right now in this market, and I know that it also changes for different types of assets. Talk to me about debt coverage ratio and what that looks like.
Yeah, debt coverage ratio is going to be something that your lender's going to talk about a fair amount, and they should be talking about that in the upfront conversations with you as to how they're going to measure the property's net operating income. So, as you mentioned, it's different for different property types. So typically a minimum debt service coverage ratio that a lot of people will use in the marketplace will be somewhere around a 1.25. Some will go as low as 1.2. And what that means is for every dollar of debt that you're taking against the property, we want to see $1.20 or $1.25 of net operating income, so that the income produced by the property far outweighs the amount of debt that you're taking against it.
Okay. And in relation to that, you obviously want to see some financial statements in relation to the property. Often we only have the offering memorandum up front until we have an accepted purchase agreement and we start into the due diligence process. And then we will typically get financial statements from either the owner or the property manager. We get the last 3 years of the owner's tax returns. So in the initial upfront process, when you're just doing some quick calculations to tell someone what they qualify for, are you comfortable going off of the operating memorandum that we have to just start that initial conversation?
Yeah, we'll typically use the information providing on the offering memorandum, but with the understanding that we're going to need that information backed up with the historical financials. So if we're looking at a pro forma on an offering memorandum, we can use those numbers, but just with the understanding that the loan amount may be reduced once we've actually been able to take a look at the historical information provided to us if there's a big discrepancy between the pro forma and the actual in-place net operating income that the property is producing.
Okay. And do you have a different debt coverage ratio for multifamily versus, say, an office building?
Yes, we do. It's on a case-by-case basis, but most financial institutions are going to have written within their policy slightly higher debt service coverages for what would be seen as higher risk properties. So properties that are maybe single use or single tenant are going to have maybe a slightly higher debt service coverage because they offer a higher risk. If a single use property goes vacant, there's nothing else to support repayment of that loan from the subject property. In a multifamily situation, if you have a couple of tenants leave on a larger complex, the property is usually going to be able to absorb that, and so it'll qualify for a lower debt service coverage.
Okay. So in today's market, and just kind of a general rule of thumb, for multifamily, most borrowers should assume about a 30% down payment roughly. And I know it all depends off of cash flow and net operating income, but just rule of thumb, roughly about a 30% down payment.
Yeah, historically we've seen 25% cash down, but in the current marketplace you're going to probably be looking at more likely 30% cash down, in some cases 35.
Okay, great. Will you come back and join us? I would love to know a little bit more information about global financial statements and some of those different components that you need to really make sure the borrower qualifies for the ideal financing.
Absolutely, I would love to.
Thank you. I'm René Nelson with Pacwest Commercial Real Estate. Thank you for watching.